So, hello everyone. My name is Lukas Sparer and I'm a researcher at Vienna University of Economics and Business. I'm also working at the ABC Research at the Automotive Center. And now I'm going to tell you something about how we try to protect human investors in AI-driven, algorithm-driven scenarios in decentralized exchanges. So, as we all know, there is a rise of AI in algorithmic trading. It has increased market volatility as a result, and fake news can spread rapidly, also causing sudden events, either if the information is true or false. It doesn't matter really, the market is reacting, and human traders have a huge disadvantage because they are slower in terms of reaction times. So, I myself also built the trading bots back in the day, and of course you have a huge advantage when it comes to execution times of the trades, etc. So what is already out there in traditional markets is there are traditional circuit breakers. They are triggered by predefined price limits. What the issue with that is that it introduces the magnet effect. So the magnet effect can basically tells you that the market volatility increases strongly throughout a predefined threshold where circuit breakers usually are defined. They introduce a trading halt, and as soon as a certain price up or down is reached, so also what the traditional markets don't do is that they don't tell you at which percentage it happens. However, there is this negative effect still occurring, either conscious or unconscious by traders. And what we introduce is a potential solution to solve this. We introduce blockchain-based circuit breakers. So here we could solve the issue to some extent. Let me introduce this example. For example, we have a decentralized exchange without circuit breaker, with a conventional circuit breaker, and with a proposed solution. So what is happening here, for example, there's a hacker that compromises social media of a tech CEO and therefore rapidly spreading fake news occur here. And what is usually happening, the price of the asset goes down very rapidly, resulting in a buy sale. What traditional circuit breakers do, they trigger a price and a trading halt at a certain price drop, for example, and then there is still this issue that the initial price drop already has occurred. What we could introduce here is a blockchain-based oracle that checks all the news data that is available if this information is either true or not. Doesn't matter if it's true or not, however, then there could be, in a decentralized exchange, there could be a smart contract introduced that instantly stops. And this would potentially give the human trader, an advantage in terms of time to evaluate if it's correct information, if he or she wants to sell or not, compared to the other scenario where automatically everything results in a fire sale. So what we did, we also framed a simulation, we executed the simulation, and this scenario is a decentralized market with bots and human traders. We introduced a bell curve of selling intensity, for example, for the algorithmic traders as well as for the human traders. And we also introduced some background noise, let's put it that way, of sells and buys of trades in general of the decentralized exchange. What happens here is there's a large gap between bot and human selling intensity. If we have here, for example, at time t equals 11, there is this news data that gets published, for example, of the tech CEO with fake news, and you can see throughout the price intensity differences, also the price is already low, as human traders here in green with intensity enter the game. What would be different? I mean, we could instantly trigger it, then we had trading halts of t equals, for example, 20 seconds, and therefore human traders could get at least some benefit because they would have the same starting point in terms of evaluating if this asset should be sold or not. And we can conclude this with the data we analyzed throughout the simulation. So we had an initial liquidity of, let's say, 10 million, for example. Final liquidity didn't change that much. Without the circuit breaker, there was an average selling price of the bots of 87.95. With the blockchain-based circuit breaker, this didn't change also too much. However, there is a price difference between the selling points of the human traders and the bot traders with and without the blockchain-based circuit breaker. So we would have a price difference of, without the circuit breaker, 34.82, and with the blockchain-based circuit breaker, we would reduce at least this price difference at which they could tackle their sell events, etc. So human traders suffer significant losses without the circuit breaker, and with the blockchain-based circuit breaker, the losses are minimized. However, I have to strongly focus also on the fact that the oracle in this regard is very crucial, because this could be enabled just with blockchain, also with introducing smart contracts, that all the news data and feeds could be accumulated also to enable this scenario. So what does it mean in terms of opportunities for implementation? So we have blockchain here as an enabler technology, because this is something that traditional circuit breakers lack. They have issues also defining those price thresholds, also those instant stops of the trading. This can also not occur that fast. Then we would have this advantage of decentralized exchanges, where we could just implement a smart contract that is directly connected to the oracles and could trigger it. So there would be enhanced market security for human investors, dynamic and automated responses to market manipulation, and collaboration or opportunities with financial institutions and blockchain innovators as well. So, as well, we could also define some future directions for this topic. So, sentiment analysis could be advanced, since AI gets better and better in terms of creating fake news, as we already see with videos that are like zero distinguishable with compared to normal videos that got recorded by humans. We could extend, for example, the oracle network as well, because this is like a huge, let's put it that way, selling point as well. The more data you have, the more accurate the system gets, and we could investigate the impact of blockchain-based circuit breakers in traditional markets as well. So let's start it with traditional markets, not decentralized exchanges, and see what the outcome would be. This would also be an interesting study. So my concluding remarks in terms of this research is blockchain-based circuit breakers can reduce losses for human traders, and throughout the oracle network, also detection of fake news through decentralized exchanges could be resulting in increased fairness for human traders. Here you have some contact with my colleague Alexander Neulinger and me. What we are doing, we've published a lot of different papers. This one is focusing on financial markets and the references. Thank you very much for your attention.
Thank you, Lukas, for the paper presentation. Does anyone have any questions for Lukas? Rather than saying other conversations beforehand? Yes, there's a question.
I can speak now.
Okay, yeah, that's fine.
So you pointed out the crucial part is the oracle. Can you imagine? I imagine that it would be a nice point to game this thing. Have you thought about those conclusions? How it would be gained? How it would be reverse engineered? How it would look back? Then maybe
Look back. What do you mean with look back?
So if I can foresee that it would be reverse engineered, let's say, then there's some.
Do you mean that people similar to the magnet effect, what is already happening in traditional markets, that they increase volatility throughout an event? For example, a news event, but it's non-deterministic, right? So
let's say I can reverse engineer how your oracle will set off an alarm for a fake news event.
I mean, that's reverse engineer an oracle.
Okay, maybe I'm not phrasing it correctly, but that I somehow can trigger your circuit breaker.
I mean, this just there would be this benefit of this oracle, since the more information, data that get fed into the oracles, and since it would be decentralized, there would be a minimal risk of triggering the oracle, right? Because since it's decentralized, if it would be a central authority, just one news data or source, or like, let's say 3, then you would have more potential to trigger it on predefined conditions. But however, since we are building it on we are proposing it to be built on a decentralized Oracle system, the more decentralized, the better, and the less corruptible in the long term.
Okay, yeah, the whole incentive system.
Of course, yeah.
Didn't think about that.
The agent system still outperforms a human, including circuit breaker.
Yes. And not the traditional one. Because since the traditional circuit breaker, I mean, also throughout the threshold of triggering the traditional circuit breaker, I mean, there's also behavioral science on that, but it concludes that either conscious or unconscious, there's an increased volatility throughout, for example, this threshold that the traditional circuit breaker is set on. And of course, they don't publish it at what percentage drop or whatever there's a trading halt. However, people still figure it out if it's static. And that's the issue with it being static as well. So also you can train your algorithmic agents also on finding out when the circuit breaker gets triggered through historical data, and then you have more or less the exact spot.
Will the circuit breaker execute, or do you still need the human hand in the mouse click?
That's an open question for the blockchain-based circuit breaker. If you still want to have like a human in the loop, like saying, okay, yes, trigger it or not. I mean, of course, it would be faster if you wouldn't have the human in the loop, because it's like similar to administrative things if you have multiple humans involved, of course. But I mean, of course, this would then also be automated via AI agents sending all referring humans that should be in the loop a message, should it be done or not. But yeah, there are a lot of interesting questions, of course, for future research as well. So yeah, it's interesting question.
Thank you.